Welcome back to the second half of the Futures Show. Now less than 60 minutes away from the cash open for stocks on Wall Street. We're seeing some weakness in the four majors ahead of the cash open. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, because we're also seeing some economic data come across the wire. Scott, good morning to you. Welcome. Thanks for sharing part of your Tuesday with us. Good morning. Let's dive into the economic data. Maybe not the most closely watched data points of the week in terms of we've got the jobs reports, ADP, Challenger, weekly jobless claims, and then the big kahuna, as I say, on Friday, the non-farm payrolls. But this number is going to attract some attention today. We've got the U.S. trade balance, a record shortfall, minus $74.40 billion. Not as much as they were expecting, $74.50 billion, but well above the $70.50 billion prior. What's this telling you?
Not a lot, honestly. You know, it's a headline number. We continue to run at massive deficits, record deficits, but it's on to the next. Like you said, we've got bigger numbers the rest of the week here, and with the big one coming on Friday. So I think the market is really focused on that. You know, we listened to some comments from Powell yesterday, again, kind of, you know, acquiescing, if you will, to the marketplace. So, you know, let's just move ahead, look to what we get later in the week.
Yeah, to your point, Scott, we've heard from Powell, it seems like 7 out of the last 10 trading days or something crazy like that on quite the run. And I don't think he's mentioned the trade balance once. He certainly has been more focused on some of the other data. Let's talk about a couple commodities that are on the move in reflection of some of the stronger than expected economic data we've been seeing here in the U.S. Crude oil to a 7-week high.
Yeah, and you know, there's talk, and there has been some talk of a super cycle in the commodity space, and oil is certainly leading that right now as we head towards $65 a barrel. And certainly that's on the optimism of you know, the resumption of activity, not just here in the U.S., Ben, but now Europe also. And you know, Europe just announcing that they're looking to reopen to visitors, to travelers. And I just saw that you know, forecast now is that global usage now could be back up to 100 million barrels per day by the end of 2021, which would be a full recovery from prior to the pandemic. So, you know, oil is on a run here, but I do think, though, it's coming up against the wall. I do think there are some headwinds here that may keep it in place for a while here until we really get the clarity of not just reopenings here, but the variants around the world, what's happening in India, tragically. I do think that there could be a lid on it, but nonetheless, it's made a heck of a run.
It sure has. And in terms of some of the headwinds, Scott was just talking about the fundamentals. You can see here on the chart some of the headwinds in terms of the technicals up around the 67 to 70 level, and then ultimately around 77, those highs that we saw up in October of 2018. Scott, you were talking crude oil, but copper also on the move and up and through 450 convincingly at this point. I mean, these are trends that are forces to be reckoned with, as we call them.
No doubt about it. And all the fundamentals for copper point to higher prices. There's a huge shortage. Inventories are the lowest they've been in 15 years. Wow. Yesterday, we saw the highest settlement in 10 years. I actually just saw a forecast come out saying that copper is probably going up to 550. They've rallied this year as the demand for copper, which not only used, you know, just in production everywhere, but it's production in EVs also. And this demand is expected to rise, partly, you know, on the push for the global push for a green economy. You've got the infrastructure plan right now. So you could continue to see massive demand while we've got a copper shortage. Obviously, supply and demand come together like that, and that points to higher prices.
Yeah, you're talking about the demand, supply also, but also ultimately the industrial side of things is what I'm hearing you saying. We saw that in silver yesterday as well, a nice run up. Real quick, I do want to pull up that copper chart again because we do have some highs up around, let's see, 464 to reckon with here in terms of, those are the highs from back in February of 2011. But Scott, I just want to real quick just flip the chart here while we're on this chart. Now, I want to go back to the daily time frame here. You can see the run up that we saw in silver yesterday, but still well below that 30-35 high that we saw to begin the month of February, but a well-defined area consolidation. While gold's given, now that we're on it, let's just kind of bring both these in here. While gold's been kind of giving back some of the gains they saw to the summer, into the summer of last year, up around 2100, silver's remained very well bid. Again, just kind of speaking to that point in terms of the industrial demand and strength in terms of economic conditions, and a great point, as you mentioned, Europe getting back on track.
Absolutely. And when you're looking at gold and silver right now, people are still looking at gold as the inflation hedge, as the store of value, where, as you just pointed out, very importantly, silver is in that industrial demand space, which industrial demand around the world now is I'm not going to say it's at a peak, but boy, oh boy, has it just increased. And as Europe really starts to get going now, if they start to get going, we could see that demand increase even more so.
Yeah, and as you were saying that, I just want to pull up a couple more charts real quick. One to keep an eye on is students of price, maybe not as heavily traded or as commonly talked about. Palladium, very well-defined trend environment to the upside. And, just kind of speaking to this as students of price, trends that have been underlying and really no rejection of at this point. We started the show talking about that in terms of the indices. Scott, if you could just speak to another one of those, which ties back into the housing comments you were making a minute ago. I mean, lumber on fire into new record highs up through 1,600.
Absolutely crazy. That one is maybe defining the home builders market now. If anything, you talk about a shortage out there. You talk about prices through the roof. I've spoken with some builders, some friends of mine that are in remodeling and the construction business. Not only are prices through the roof, they can't even get a hold of the product themselves. So the construction people that I'm talking to, they're on delay. They have to delay their clients not just weeks, but months on end now because they can't even get physical product right now. That's how hot that lumber space is.
Looks like 8 weeks in a row of, heat to the upside here again. Copper has been. And in fact, now that I look at it, let's pull up this chart here real quick. This is impressive. 8 weeks in a row to the upside since coming off the mid-March low that we saw down around 850, Scott. And wait, let me just double check that. Actually, 8 in a row to the upside, down only 2 since coming off those lows since the beginning of the year, down just below 700. Scott, we kind of touched on some of the economic data. We mentioned here, again, this trade data, probably not the most closely watched release of the week. Things are going to heat up here, though. We should be dialed in as the Fed clearly is. They've made it clear, not only in terms of inflation, but also they want to see a couple strings of some really strong jobs reports. We're hearing that we could get a second one on Friday.
Yeah, I don't know what they're waiting for. I mean, we've seen the trend, right? I mean, we probably will get one on Friday, which would be a great thing. And then it's really going to back the Fed into a corner in my opinion, because if we get that really strong number, which we all hope for, what are they going to do? Are they still going to just pound the table and say, nah, we're going to let this economy just heat up, or we're going to let it run? Or are they going to start facing what we're seeing here, the reality of the economic comeback? In fact, I was just doing some research and looking at Canada. Canada is on the comeback as well, and their central bankers are actually talking about a raise sooner rather than later. We could see one coming out of there before the Fed does here, which that might even put more pressure on our Fed.
Yeah, they just recently cut their bond purchases, some of their asset purchases, and again, kind of hearing that that is the case. Now, we just heard from the RBA. They left rates unchanged at 0.10%, so we are seeing some shifts, but not necessarily abrupt shifts, and certainly nothing to derail some of the trends that we've been seeing in terms of commodities. We were just talking and taking a look at with Scott, and we'll take a look at some of the financial trends we've been seeing here in just a second. But Scott, appreciate you joining us to break down what's playing out here in terms of this data point here at the bottom of the hour, and commodities on the move, the trends that are still remain present. Scott Bauer, the CEO of Prosper Trading Academy. We've been